How's it going, investors? I'm Ari, and welcome to my channel where we're talking value investing and dividend investing. So if you're not exactly interested in either of the two, then
get out.
Or stay for a moment longer and see exactly what all the talk of the town is about, because this is absolutely life-changing when it comes to investing for hardly doing anything other than being invested into top-notch companies. Now, given the state of the market, my personal account is back under $100,000 at just $95,228.24, aka it's dropped about 10 to 15% within the past couple of weeks, which may sound pretty depressing, but if you're a dividend investor or value investor, this is actually the greatest news we can ever hear, because we get the opportunity to get into high quality discounted stock opportunities. That time is right now. But in today's video, given it's the conclusion of October, the beginning of November, I wanted to go all the way back to the beginning of October and just go through all of the dividend income that I've received throughout the month. That's 7 total dividend paychecks to break down. But before we actually go ahead and dive in, please go ahead and tap on that thumbs up button for me. It greatly helps me out in growing this channel, and more importantly is subscribing to join me on this journey. Now, without further ado, let's dive right in. Now, before we actually get going with this dividend income, I want to break down how I typically go about these videos. I'm going to give you the company name, the ticker, tidbits of insight about the company, and then just how much they paid me out in dividend income. Now, the reason I do that is so that you can make a more informed decision if you wish to actually proceed in investing into these companies. I see other channels and just how they share their dividend income, and honestly, quite a waste of time for the both of us. So with that said, the first stock that paid me out in a dividend was Coca-Cola, ticker symbol KO. And I know I don't need to go into too much detail about Coca-Cola in order to introduce this investment opportunity to you, but I do think it's an ultra-safe investment for our trying times, and it's the world's most dominant soft drink manufacturer on a global scale with over 200 plus brands. It's giving way for its ability to actually amass a $254 billion market capitalization. However, here's the thing. If you are to buy into Coca-Cola, in my opinion, it just has to be at the right buy-in price, and it's currently performing, well, pretty good on the year. It's trading for $58.88. It's actually up by 1.4% in the year. With that PE ratio around 25.8, I would say that it's not exactly the best time to be investing into Coca-Cola. I'd like to see it come down in that PE ratio. However, we do see hedge funds that have actually been padding up their portfolios with an investment into Coca-Cola, and it looks like by the millions here. And insiders, believe it or not, are doing the exact same thing, loading up on shares of their own company, which is just also a pretty good sign that, well, this is a great investment and will likely be so for decades to come. Now, as for where I personally stand right now as a shareholder, I'm going to remain long on Coca-Cola. It's a dividend king with a dividend yield coming in at 2.92%. Now, for owning 18 shares worth of Coca-Cola, they paid me out $8.28. And upon an economic recovery, I'm going to just kick back and relax until their share price kicks back up to $64.50 as per analyst forecasts. Next up, on October 12th, we had Omnicom, ticker symbol OMC, pay me out a dividend. And while Omnicom is one of the marketing and advertising industry leaders, it's on my list of positions to actually cut and sell out of when the time is right, given I want to focus on trimming my portfolio down to about 10 to 12 holdings. Though this is not to say Omnicom is not one heck of an investment with over 5,000 clients in over 100 countries worldwide. What is more is the fact that the company has clients like Apple and McDonald's, Unilever and Johnson & Johnson, which ultimately builds confidence for me as an investor. And with their $14.6 billion market capitalization, this all only tells me that when the market actually stabilizes and some more calm comes back our way, advertising budgets will kick back up, and of course Omnicom will be on the winning end of all of it, which is exactly why analysts foresee some more upside potential coming their way with a target share price at $73.50 per share. However, as for me, I'm hopeful to sell around that $75 to $80 share price window. Now, as for that dividend paycheck, I just owned 10 shares worth of Omnicom, so I was able to receive a dividend paycheck for $7.13, given their dividend yield is coming in at 3.85%. And then just 2 days later, on the 14th, the top-notch net lease real estate investment trust paid me out in a dividend. This REIT was Realty Income, ticker symbol O, which has actually begun to look much more attractive in the last couple of weeks at its current stock share price, and therefore I've been considering doubling down on this investment. Now, not only are REITs ideal investments for our economic times, which we're currently experiencing high inflation, but investing into a REIT like Realty Income is just an investment that delivers a ton of reliability with a $37 billion market capitalization and Realty Income's portfolio that has over 11,000 properties across all 50 states, well into Puerto Rico, Spain, and the UK as well, with over 1,000 clients. And those clients range from 7-Eleven and CVS to Home Depot and Walmart. So retailers that are really just going to remain in business through the ups and the downs of the market. Now, as mentioned, Realty Income has been trading at more attractive prices rather recently. It's down 9.3% on the year, around $61.63 per share. Not to mention, hedge funds are also pouring millions of dollars into this investment. The analysts are predicting a ton of upside as well, about 12% worth of it, coming up to a share price of $69.36 per share. Now, I personally own 103 total shares worth of Realty Income. They paid me $25.60, given their dividend yield is coming in at 4.74%. Moving right along to the fourth dividend paycheck of the month, it came in from Medtronic, ticker symbol MDT, which is an industry-leading medical technology company that honestly, at this point, is a toss-up for my portfolio. And I'd be willing to sell the holding if Johnson & Johnson came down a bit, Medtronic went up a bit in share price, and I would ultimately just pour my money into Johnson & Johnson. But as of right now, this medtech leader with over $114 billion market capitalization is trading down on the year by a little over 17% at a share price of $84.06 per share. And it has certainly been struggling over the last few years, beginning in 2020 as medical technology sales have dropped, with a big focus, of course, largely being on just fighting COVID. However, with the economic backdrop only have gotten worse for Medtronic, it's disrupted supply chains. It should not be a surprise that the stock is down on the year, but the good news here is the PE ratio is tad lower at 22.2, and better yet, analysts do have forecasts over 15% worth of upside, coming in at a target share price of $96.69 per share. With an economic recovery being inevitable, hedge funds are certainly taking advantage of a lower share price, and a lot of smart money is pouring capital into Medtronic at this point in time. Now, as for the dividend paycheck I received from Medtronic for owning 25 shares, I received $17.14. Given Medtronic's dividend yield is coming in at 2.99%. Now, as for the last two stocks that I received dividend income from, well, considering the fact that the seventh paycheck was actually from simply having capital in a settlement fund with Vanguard, we're just going to get to talking about two more real estate investment trusts, the first being Stag Industrial, ticker symbol STAG, being first up with a paycheck that hit my account on the 17th of the month. Now, Stag Industrial has become a position within my portfolio that I've recently begun to scale up given the direction of the future, which is all about e-commerce. And Stag Industrial focuses on industrial properties, particularly warehouses and fulfillment centers, with clients that are in the logistics space and most prominently being Amazon. So how about that? An investment in Stag Industrial essentially makes you Jeff Bezos' landlord. Now that sounds pretty good to me, and with a market capitalization at $5.7 billion since their founding in 2010, it's steadily only been growing their portfolio, now sitting at 561 properties across the United States. But let's get to talking about that stock share price, because right now at this moment in time, it's down on the year by 31%, trading around $31.34 per share. Yet analysts foresee 23% worth of upside coming Stag Industrial's way to a share price of $38.83 per share, which is exactly why I'm going to continue to hold my position and moreover just dollar cost average my way in to scale this one up. Now, I hold 29 total shares worth of Stag Industrial. I received $3.59 from the position, given their dividend yield is sitting at 4.61%. And last but certainly not least, I want to quickly discuss Store Capital, ticker symbol STOR. Given I only hold a handful of shares of Store Capital, upon an economic recovery, I just want to double down on Realty Income or Stag Industrial, so I'm going to be selling out of the position. But it's another REIT that is actually not a bad investment. As a matter of fact, it is the REIT of choice for Warren Buffett, which should speak volumes right off the bat about its safety. As for Store Capital's portfolio, they hold over 3,000 properties across the United States with over 5,000 clients. It honestly just reminds me of a smaller scale Realty Income. Now, Store was more recently founded back in 2011 and has since then managed to amass an $8.9 billion market capitalization. It's currently down in the year by just about 5%, trading for $31 per share. Now, with its nominal upside potential projected at about 1.2% of an increase, coming up to $32.08. Again, I'm going to be selling out of this position, but for now I hold 5 total shares. They paid me out $2.11 based on their dividend yield coming in at 4.92%. And that is it regarding dividend income from the stocks this month. As for that settlement fund payment, I did receive a total of $10.89. This brings our grand total up to, get this, $74.74 for doing absolutely nothing. That is the true power of dividend and growth investing. Now I want to jump right into our dividend tracker here. We can see that we are definitely outbeating last year's October total, but appearing to fall back a bit from a couple of months ago, which is because I've decided to actually move some money around, jump into 2 non-paying dividend investments. However, we can see that now we're earning over $100 per month in passive income alone, which is exactly why it's a win still in our dividend investment books. Now, investors, that's it from me. I'd love to know how much money you brought in this past month of October, your top paying dividend stocks, or if you have any major investment wins. Drop all those comments down below to let me know. And keep in mind that I am by no means a financial advisor, so if you proceed to make any investments whatsoever after watching my videos, always make sure to do your own due diligence first. Oh, and how about it, tapping on that thumbs up button for me and subscribing to the channel, because at the end of the day, it goes a whole heck of a long way, not only for me, but for the entire subscriber base that we're building here. Now, until next time, investors, I will see you in the next video.